Hello and welcome to today's trade breakdown. We had a good one today. There's a bit of a mistake actually, but it worked out very well. So took a sell in London Open, netted over 100 pips. So a very good trade for today. Let's break it down. So hop over to the charts. So it's about this area where I took it. We had news today. We had a very, very heavy news day of PMI. So we had, as you can see, we had the Euro, French news, then we had the German news, then we had the Eurozone as a whole, then pound, then USD, all PMI. We had a bit of mixed numbers. You can see a bit of good, bit of bad, bit of as expected, bit of bad, bit of good, bit of bad, bit of bad, bit of bad, bit of bad, bit of good, bit of bad, bit of bad. So kind of not great day for the European indices by any stretch. So what I did, where the mistake actually happened was, if you recall from yesterday's trade breakdown, where I kind of just missed everything, I still had that pending order up in this zone. So I'll go into what yesterday was so you guys can remember. So this is going to cut off Tuesday, going to cut off right here. Okay, so quick little summary of what happened yesterday. I was looking for sells, and I was looking for sells inside of this gray zone over here. And that was to do with this area over here to the left that I'd already identified. Okay, so it was this resistance and it was this resistance candle. And what it did is it created this zone for me that I really liked the look of. When price was approaching it over here yesterday, Tuesday the 22nd, what I was looking for was for New York session to sweep the London high, this area in pink, and then give me a sell entry, a sell signal, something that I recognize. It did indeed give a signal on the 1 minute, but what I was looking for was trying to be a little bit fancy and had a pending order here about this level. And what I really wanted it to do was to sweep the high and then sell off. So it was a bit of a bummer yesterday, missing this move, but that's why we can sort of leave these zones. Once you identify zones correctly, it's not like that's the end of the world right here. What price did was it made its way back up. Okay, so let's accelerate through the candles. So we had a little Asian session. Okay, a little bit of volume again, which has been pretty decent this week. It just hasn't really it's just another 67 pip day Asian session. So this week, the Asian session's been like this blue sections have been fairly substantial compared to even last week. There was a big one. That's the one that kind of threw me. But you look at all the days prior to that, and they're all fairly like small little days. Yeah. Anyway, so I'm not gonna complain about there being volatility. When Euro Open started, as you know, we get to the charts roughly around 7:30. Okay, so this is the 7 o'clock to 7:30. This is the 7:30 to 8 o'clock. So this one here is leading into the London Open. The first batch of news, I'll go to the 15-minute, was the German news. Okay, sorry, the French news. So what it did is it spiked down, grabbed liquidity, and then started pushing up. I've got this red zone here. I'm going to mark off why I had this red zone as well as an area of resistance. It's based on the higher time frame. We'll have a look at that. Okay, it's really nice and repeatable as well. 8:30 candle. So this is 8:15 up to 8:30. So as you can see, when we see this volatility, 8:15 was the French PMI, 8:30 was the German PMI. We had bad numbers. So we had bad numbers is bad for stocks. Okay, bad for the indices. So it doesn't make sense for price to push up. Now I'm going to talk a little bit about fundamentals later on. towards the end of this video, just a really quick little capture of what this could mean. But essentially, this was a buy to sell move. Now, I got lucky having that pen in order there still from yesterday, because I was actually quite busy and I was talking about this area, and then I realized that, hey, I left that order in from yesterday. So I actually took this one with no confirmations. It's almost like a cowboy entry. It's just at a zone that I really, really liked. Okay. So why also this black, this red section, you could see the next 15 minutes just wicked up and then just tumbled down. So really beautiful move in line with the poor PMI numbers coming out of Germany. Why do they react off this red zone? Well, if we push over to the 1 hour chart and we have a look, we can see that we've got a really nice rejection wick over here. Now, it kind of doesn't look like much if we just have like just one wick. Well, if I do extend it across, you can see that it has been an area of contention previously, for quite some time. Price often sort of wicks into this and then rebounds. But how can I have drawn it so exact? Well, what are the things I'm looking for? Well, I want to investigate this wick in a little bit more detail. So to do that, I'm going to go down the time frames. So if I drop down to the 30-minute, what I start getting is a little bit of like a little bullish pin bar kind of thing. If I drop down to the 15 minutes, what I'm looking for is a liquidity candle. And this is a liquidity candle. So if I was choosing just like this area, I really like this area for a zone. Okay. So if it doesn't respect it the first time when it comes up to it, what it will often do is it will hold as a support for price to push up. Now, this is the exact same thing, right? So what I had on here, this is where this red zone was anchored from, saying that if this was a true area where manipulation occurred and that buyers entered the market, I like this one because it's also in the New York session. The timing of this candle is 2:45. So it's 15 minutes after NYSE, so New York Stock Exchange. So that's a high volume time. So a sell to buy move at that time is always going to be an area of interest when it returns to that level. Okay. So that was where I had, knowing that based on these 30-minute candles that created this gray zone, plus there was a few like these thin black lines were like doji highs, doji lows, new London high from Wednesday. We know that there's always going to be liquidity above these kind of zones. So doji highs, London high, liquidity candle based on from New York session from the 16th. All of these areas are going to be beautiful areas for price to rebound from. We also had London high from, oh, sorry, not the 16th, whatever the date was back there. You can rewind and have a look. We had London high from the Thursday, the 17th, which got swept yesterday here, but it didn't quite get into my zone yesterday. This time, we did have, on the back of that PMI news coming out of Euro, we did have a really nice push up and then push down from there. So my stop loss was a little bit protected because it's up inside of these zones, and it makes more sense for me to put my stop loss above my zones rather than putting it above a swing high. These swing highs are just too easy for your stop loss to get hit. I really think it's a silly idea to be putting stop loss like 7 pips plus spread above a swing high. It just gets taken all the time, and you always feel like you're in the move too early. This one, because I had actually forgot about it, price had already pushed down like 60 pips. So I took basically, I took 60 pips before I even started closing partials. And then price sort of hesitated for a while. It did rebound. We did get a little bit of a rebound underneath this euro low, which makes sense because there's always, there's liquidity here as well. Then just left it. What I did is I brought the stop loss down. Okay, more or less just a little bit above where the break even area was. Price rebounded off these little thin black lines, and eventually on the back of New York volume. Oh no, it was even before that we started to tumble. which was that then the New York volume takes it down. So really nice move. Posted the little trade result into the Discord, as you can see where the entry was, where the target was. Beautiful 101 pips. Captured the screenshot at that point. Very happy with it. And yeah, that was pretty much the trade of my day. Okay, then the rest is history. Okay, so I had another little move on gold, so I might just talk about that one a little bit. Actually, no. First, I'm going to do a little bit of fundamentals. So PMI, why did PMI go up and then down and sort of like mess around a little bit? Why did it wait for the sell? And that's usually because there's always two narratives at play when you've got fundamentals or these like economic data releases coming out. So it's kind of like scales. So you've got two narratives here. We've got PMI numbers that comes out and they were worse than expected. So that's showing a slowdown in the economic Eurozone economic area. So that's, reduced manufacturing, reduced services in the Eurozone. That should be negative for stocks. And that's because they're having to hold less inventory, having to pay, there's just less demand. So you would think this would have an immediate effect to push down. But then also what we're battling right now is high inflation around the world. So a slowdown in demand signified by these weak PMI numbers that comes out also might lead into the ECB to maybe hold interest rates where they are, because maybe interest rates are in restrictive territory now. So if they're actually going to hold interest rates rather than hike interest rates, that's actually good for business. So we've kind of got bad numbers for PMI that on one hand is bad for business. And then on the other hand, what these poor numbers might lead for, might sway the ECB, European Central Bank, to hold interest rates where they are. And that's actually good for business. So we've got like kind of, pushing and pulling forces with these bad numbers, two narratives. So which one held more weight? The one that held more weight eventually was that businesses starting to slow down. So we had a little buy to sell, kind of make your head hurt a little bit trying to think too much into it. But what we've got to do is turn up, create an idea, and be done. Okay, so GER40 paid the bills again. I'll go talk about a little bit on gold because there was a nice little move here. So we had the before the PMI numbers came out of the US. So once we had poor numbers coming out of the US, we saw the US weaken, gold rallied. This time at this point we saw. Let me just replay some stuff here. Okay, so New York Open, as we know, on UK time, 1 o'clock. First 15 minutes, what we had in London, we had the same resistance zone that you've been seeing me draw at pretty much all of these trade breakdowns. So resistance followed by another rejection candle creates a zone. Now, what we need to do is wait to see if this holds or not. Okay, so second 15-minute candle with COMEX. This is the COMEX open in this 1:15 to 1:30 candle. COMEX open is at 1:20 p.m. London time. Commodity exchange, that's what COMEX is. First 15 minutes, little sell to buy move, closes nice and strong and bullish. Then we push up again, nice and strong, but we're starting to slow. Like we've got a little small wick. We've got a monthly level right here. Before, if this isn't true sells here, before we can have like a really convincing push up, we'll most likely need to come back and retest this area. So I'd be really careful entering buys late in this move unless you were already in it down here. So held off buying anything until we had price retrace back into this area, create a support, and then go long again. Okay, so next 15 minutes, you can see just came tumbling down. So really good idea not to have been in buys at this stage. Now, if this is going to hold, we've got a liquidity candle. So price is likely to retest this zone. Again, this wick. It's already retested these areas. So this little manipulation has had time to get out of those trades. Now we just need to wait for some sign of bullish momentum, and then we can go long again. That bullish momentum came on. You can use your lower time frames. First candle was like the one that closed bullish was a 3-minute candle, little support candle. Okay. And then from there, it was just straight up. Just nice and easy moves. The news came out, PMI news came out at this candle here, 245. You can see the size of it. Look at it. Just gone all the way through the screen. Okay. This was backed by bad numbers. Okay. So a slowdown manufacturing, slowdown in services. And that led to USD weakness, gold strength. When you've got momentum in the market, just don't fight it. Just look for wicks to be filled. Okay. Anyway, that was it. I did attempt a little sell over here to see if we can correct some of this move once we hit the monthly level, but there was too much momentum to the upside, so it just moved around a bit and eventually just closed it out for break even when it was going sideways. So that was my day. I had a break even for gold. I had a beautiful 100 pip move on GER40, and then tomorrow we do it all again. Okay. Good luck. I'll see you guys soon.